All right, good evening, everyone. Okay, sounds check. Yep, thank you. So while waiting, the rest of the guys flowing in. So right now time is 8:02. We'll take another like 1 2 minute for the rest of the people who flow in. So if you are new here, just take a few moments, give me a while. If for those who have been here for quite some time and you think this is a good sessions and good channel that you like to share with your friend, feel free to click shares and then share it within your network, your group of peoples and group of friends. All right. Okay. So let me just do the last setup to make sure everything is going right. Okay. All right. All right, good evening. Okay, whoops. All right, let me just do a last reminder to the group. All right, tonight is 18 November, so it's 1 week past 1 week past 11:11. So your parcel and stuff, I believe, started to flow in. Yep. So my house as well. The things started to flow in. There's a lot more Ah, boxes that need to unpack. A lot of baby stuff. Okay, live now. All right. Hi, Diana. Hi, Ice-T. Hi, Hui Guang. Hui Guang, yes. Just to confirm, we will be meeting next Wednesday, right? Next Wednesday. You buy how much milk powder? Actually, in the end of the day, what we find out, like especially in Singapore, milk powder is still cheaper to buy in JB. So I just buy diapers. So I buy two boxes of diapers. I buy additional like baby mat for his room, and then I buy a so-called book rack, and then I also buying a so-called shelf lah for his toys and stuff. Yeah. Okay. Yep. Thanks, Hui Kwang. Yep. So is what in ultra more right, in PJ. Okay. So whoever if you're in KL and then you like to have a meetup, I'll be in like PJ Ultra Wednesday night, 7:30 to 9:30. So Hui Kwang will be there as well. So if you're free, you like to join me, please remember to text me first. If not, I don't know you are coming. And we may not met before. So even if I see you, we may not met before. So yeah, just give me a text. All right. Good evening, Zeno Lee Sky fan pages. Yeah. Okay. All right. So hi Kev. All right. So let me just all right. So right now time is 8:05. We'll start in a short while. So later if I'm in pain, I'll use this. So don't mind me, I'll be using this later. So I have a very bad backache. Yeah, I couldn't sleep at night. Yeah. Um at first I thought it's something to go within my organ, like kidney, whatever, but lucky it's not, it's just muscle. All right. So let's just start. All right. Welcome everyone to our weekly WealthPulse every Tuesday, 8 p.m. And these are sessions whereby we share market updates, we share company analysis, and we might share some company insights that we find interesting. So if you are first time here, not to worry, I will introduce along the way. So tonight there will be three segments. The first segment we'll talk about the market updates, things that we find interesting. The second portion would be company earnings updates, or if there's no company earnings, we'll share about some new company or some companies that people are talking about. And the last portion, which is the third segment, we will talk about company insights more in depth, in the sense that it might be an investable company or it might just a case study that we like to share with our guys. So it's in a private session. Why? Is because like we discuss more in depth. We may share our portfolio, and then this might be more suitable for people who already invested and like to go in depth even more. So these are the three portions that we shared tonight. So all in all, why are we doing this well pulse strictly? So very pretty simple. So every day market go up and go down. If you are sitting this roller coaster, without a close friend or without a group of people that are going through this together, sometimes it's a bit tough. So that's why we build up this community. So every Tuesday, we'll talk on the market and then decipher what is important and what is not. And in the end of the day, this is just information. What you like to translate is, with this information, we translate into our portfolio in the sense that should we take or should we not take action. So in the end of the day, what we want is our portfolio to grow soundly and for us to sleep soundly at night as well. All right. So this is weekly WealthPulse. So if you like this session, please remember to click like before you start so that this session will be shared within your community around your so-called YouTube circle. And if you love it, please feel free to share it. All right. So without further ado, let's start tonight. Okay, let me just see the button. Do some resizing. Okay, and then just do like maximize it. Okay. All right. So tonight there's the big deals like over the weekend. So Buffett, or actually it's Berkshire Hathaway, at last they added this tech company Google into their portfolio. All right. So you share a bit like how much they have buy, what does it mean, and then should we uh take a take a stake in it, or should we like them build up our position. All right. So we have been talking about Google for quite some time, and then in actual fact, the last earning call we also shared a bit more, and then we shared this cloud trio. So within this three cloud trio, right, I also shared if there's a possibility that you like to add, right, which one you will add. All right. So if you have missed out the session, not to worry. The Cloud Trio is on our YouTube channel. You just click the live. There's a Cloud Trio that we share about these three company. And if more specifically, we do some cuts. But the cut itself we just do on Microsoft. All right. So yeah. But nevertheless, the full session is in the live portion. So feel free to click into the Cloud Trio. And then we also talk about Amazon. So Amazon is a company that we less covered, but true to be told, actually, Berkshire Hathaway also had a stake in Amazon. All right, and yep. So last week we talked about the stimulus, and this week, if you have not subscribe and then you miss out the last few session, make sure you have subscribed our channel. If you like the video, I will wish that you click like. And if you think this channel is good, feel free to share with your friends and family. And of course, if you have any comments or any ideas that you think you have different opinion, feel free to comment in the video itself. We will read each and every comment. All right. So just a quick update from last week. So market seems like going down and then going to the fear zone. So last night, if you follow majority of market or majority of companies are having this red sea. Other than Google. Why? Because there's a good news. Because Warren Buffett, they are building their stake. And later we'll share with you like how much they have buy, potentially how much more can they buy, and then how much cash on their hand where they can deploy. All right. So we'll talk about it in a short while. All right. So Diana, why are you closing your eyes there? All right. So there's a lot of earnings that come out. So so far, I don't know, is Rupert here tonight? So far, it's a company that Rupert would like to discuss more about it. So we have not been talking about it, but yes, we'll come to it. And then, yeah, so we have covered Microsoft, Alphabet, and also Amazon. Yep, and we haven't really talked about Facebook as much, but we could talk about it. And then the following week we have like Palantir. We did talk about like ARM Holding, and also what is the session ARM and then another one. I can't remember. So it's like 2 weeks ago. The trade desk, ARM and the trade desk. So we did go deeper, all right. And then Duolingo, after they announced their earnings, right, the share price just tanked, all right. Like why? Because they don't want to go growth strategy anymore. They want to go into more so-called quality kind of stuff for their their users. So that's why they tone down their earnings so-called expectation. That's where the share price go tank. But is this truly reflection of the business? Um, if you guys are interested, we can go in depth into it as well. So let me know if you guys are interested. Yep. And then last week itself, there's like CoreWeave, Nebius, CoreWeave and Nebius, these two company are so-called NVIDIA portfolio company. And C Limited, I'll talk about C Limited today. There's On Holding, Walt Disney as well. All right. So these are company that disclosed last week. And this week, we have the biggest, most anticipated company in the whole, should I say word? In the whole world, sorry, in the whole world. Wednesday is a very important day because this single company could move the market by a fair bit. All right. So yeah, if you have not followed and this is the first time, the company is called NVIDIA. Yeah. So they are making earnings announcement, and in actual, everyone is anticipating it. My personal feeling is this: whether or not the share price go up and down, don't get affected as much, because whether or not Nvidia meet the market or even beat the market, uh, there's possibility whereby the share price will go down as well. All right. So don't see too much just on share price. Let us focus on the business itself. All right. If it's okay, just type it okay. All right. Yeah, because I have a feeling whereby even if they have meet the market expectation or even beat the market, it will not uh, go up as much, and worse still, it might go down. So sometimes Mr. Market would move differently. All right. So whether or not go up or go down, don't get affected too much. All right. Because this single company could potentially affect quite a few of the related companies, the related AI companies. Yeah. So that's why the market is anticipating it. And of course, tonight there's Dolby that will be announcing their result as well. So if you have not followed Dolby, I think I cover it, but I'm not so sure is it for the YouTube live session. But if you have subscribed for our WealthPulse subscription, there's definitely in your you definitely can rewatch that. All right. So you talk about Adobe is like arm holding. They are in licensing business, and licensing business have very high margin, 90% margin. All right. But of course, they have a lot of marketing costs and R&D costs. In the end of the day, it's still a respectable net margin. So they will be announcing tonight, Adobe. All right. And then Hui is here. Have you read Xpeng? I didn't follow Xpeng. So yeah, maybe if you guys are interested, just share a bit more, huh? Okay. Yep. So this first news. So the first news is the last few weeks or even the weeks before, the market have been talking about this government shutdown. And in actual fact, government or US government has shut down for more than a month. And then if you go to this website, right, they have not updated yet. They still show government still shutting down, and then the numbers still ticking up. What you see in here that caught your attention? The White House, President Donald Trump, the number of days shut down the company. What is the thing that got your attention when you read this like page, or what you think that doesn't sound straight right here? And this is the White House website, the whitehouse.gov website. The White House, i.e., government, and the government right down right here. What have shut down the government? Right, it's just some interesting thing that I find. Hey, won't you guys be curious or doubt? Hey, why is Democrats have shut down the government? Huh? Isn't it is a consensus decision by the parliament, the senates, and they are driving or putting the blame on Democrats on the White House website. When I read this, things doesn't sound right to me, but the White House is right now being managed by Donald Trump. That's why I guess he put down the directions to highlight Democrats have shut down the government. Yep, this is the thing I find. How can a government like put this kind of statement on their official website? But nevertheless, this is US, huh? But actually, Trump has already signed the deal. They already ended the government shutdown already. So in actual fact, it's not 48 days, it's 43 days. And actually, this 43 days is the longest that the government has shut down. And this have affected this This already affected their GDP, but it's not took by a fair bit. But what they have signed is more important. They have signed that they will be so-called adding 1.8 trillion to the government debt, so total add up to 38 trillion. And this bill is only extended until 30th of January. So it's just nice for another 2 months until 30th of January. So you could have a better Christmas, you could have a better New Year Day, but it might not reach Chinese New Year. Yeah. But nevertheless, it's until 30th of January. So until 30th of January, there will be another topic will always pop up is would would the Trump government sign a bill to extend the healthcare bill, right? Why this is so long a ding dong is because the Trump don't want to approve the healthcare bill, and yep. So that's why the Democrats don't want to give approval. They say, where is the healthcare bill? All right. And so some of the Democrats cannot take it. So that's why they vote for this bill to go ahead first. All right. But because of this prolonged holiday, so-called holiday, um, people are getting worried. Why? Because food aid cannot be processed. The statistic, so-called people who handle statistic couldn't come out. And then in the end of the day, if it stretched to Christmas, then it will affect the Christmas shopping season. And in actual fact, right now is Cyber Week, right? Amazon Cyber Week, Cyber so-called what, Cyber Friday week or whatever. And if the bill doesn't approve, right, ah, Amazon will have some issue as well. People will not spend or shop, right? Because their salary didn't come in. And then maybe people who wait for aid, right? The aid didn't come in. So this is a thing whereby I guess this is the pressure from the public and resulted at least they extend this bill until 30th of January. All right. So this is the first bit. Second bit is this. All right. So despite AI bubble fear for the past few months, Warren Buffett, Berkshire Hathaway. So whenever Berkshire Hathaway make an investment, make a move, Warren Buffett names will come up, regardless whether he make the decision or not. So right now, even if he has taken a step back, people still link these two together, which is Warren Buffett, Berkshire Hathaway. So Berkshire Hathaway have load up load up like the hyperscaler Alphabet, which is Google, and then it has resulted the last night share price went up for 3%. All right. So just a clarification right here. Although we put Buffett buys Google, actually we just meant Berkshire Hathaway buys Google. And right now, since like Warren Buffett has stepped down, actually this decision might be from or this decision is definitely from their manager, which is Greg Abel or even Ted Stretch. All right. So these are the people who decide to buy um, Google. It is not from Warren Buffett. All right. But let's look at what have they bought, how much have they bought, and is it a meaningful amount, right? So here, actually, when we talk about like Buffett or Berkshire Hathaway investing in Google, right? So if I know there's a story in 2017, they already mentioned, hey, actually, we already uh, uh, intend or aware that we might want to look into Google. The simple fact is this: there's this company under Berkshire Hathaway umbrella, which is called Geico. You know the insurance company Geico, right? And Geico spend a lot of marketing dollars on Google, and they say, we spend so much that why aren't we investing in the company? So this is not the actual word, but this is the thinking behind. So that's 2017 when they shared in this like AGM, right? Actually, they already been looking at Google. All right, they're really looking at should we so-called like invest our money into Google, but it's only until recently they decide to invest a stake in it. All right. Okay, so how much and what's the price they have invested? So they have announced their stake a few days ago for the last 3 months. All right, so no one would actually know how much and what the price that they bought. So we just know the average. So since 3 months ago until now, the share price had went up from 175 to around 255, right? So from this period, this is where Warren Buffett or Berkshire Hathaway slowly add up their stake, right? So when they add up their stake, right, we wouldn't know exactly how much they buy or what's the price they buy. We only know exactly what is the unit that they bought, but not the actual price they put in. So if you follow, just type in the one. In other words, we know how much share that they own, but we don't know what is the price that they bought, right? So what we can do is we just know the average of this like share price movement from 175 to 255. So averagely, their stake is at $200 per share. All right, so this is what we can estimate. All right, and they buy so much that this is their 10 largest so-called allocation in their portfolio that takes up around 1.62%. 1.62% of the whole portfolio, right? So it's in other words, right now is $4 billion worth in Berkshire Hathaway. All right. So 1.62%, is it a huge or a small stake? Maybe just do a quick polling right here. All right. So is 1.62% huge or small stick? All right. Just like to make it fun, huh? So is it huge or small? All right. So it's a $4 billion investment. Yeah, it's a $4 billion investment, but in terms of portfolio wise, it just take up 1.62%. Yeah. Yeah. 1.62% still in top 10. Yeah. So you can see their so-called percentage of like portfolio, right? So the biggest two, Apple 22%, American Express 18%, Bank of America 10%. So here is totally close to 50 plus to 60%, and another 10% in Coca-Cola. So you see the biggest stakes are all here. These are very small stick. All right. So in other words, let's say Alphabet, Alphabet, the share price doubled. So 2%, it only increase to 4% if the rest doesn't change. All right. So 1%, 100% of growth, right? You see that actually it doesn't move the portfolio much if it's just 1.62%. Yeah. So this is how much they have. They invested 4 billion, just 1.62%. All right. Okay. Yep. So thanks for joining the polling. Yeah. It's not huge. Yeah. It's just 1%. 1% of what the people are putting, what Berkshire Hathaway have put in. All right. Okay. So all in all right. So a lot of time when we talk about investing, right? Uh, we always look for the best person, right? So just like last week when we talk about like the last shareholder letters that Warren Buffett have written. How many of you have watched that? If you watched that, just type in a one. Yeah. So how many of you have watched last week so-called Berkshire Hathaway Warren Buffett farewell letter? They name it as farewell letter lah. If you have watched it, you have really just type in a one, right? And actually inside there's one liner, right? So just broad stroke, right? So one liner is like uh he said that the second phase of his life is better than his first phase of his life. Why? Because there's always improvement that can make, right? And along the way, all right. So how he can make improvement is to follow a hero, follow so-called the people who are greater, so that you know who is the one that you like to replicate, right? So for us, that's why as an investor, right, we look up to some of the it's not big time, like some respectable and investor that have long track record. So these are the few investors that people who always talk about, from Monish Prabhai, this is Monish Prabhai, and then this is Howard Marks, Ray Dalio, Li Lu. Uh, so it's something like China, Berkshire had so-called China, Warren Buffett, Charlie Munger, so Charlie Munger, Katie Woods, or Bill Gates, all right. So if you see the track record, right, Katie Woods, if you just look at 3 years after COVID, her portfolio grew by 107%. But if you include the spike, right, in 2021, right, So they are still doing better than S&P. But if you invested in a peak, right, you're still having some losses, lah, right? But nevertheless, her return is still 107% if for past 3 years. All right. So as an investor, right, or a retail investor with AI, should I just follow their portfolio? Why? They are making 60% for past 3 years. Maybe I think a lot of you guys are maybe performing better than them. But for those who are not, do you think we should just use AI to follow their portfolio? Just a brief feeling. Should we follow? Yeah. Uh, yes or no? Okay. Should we just follow? Because why? They have long track record. They have made so-called like analysis. They need to be more expert, professional, better in their stock pick, and then of course with their market timing, they have better informations. They have like so-called a team to do all this. We are just investing alone. Why not just follow them, lor? Yeah. Oh, okay. Wow. All right. So keep the voting coming. So yeah. So these are questions that every new investor will ask, or even people who are invested, right? Maybe they are not making good return. They will ask, hey, why not I just like follow their portfolio lah? Or like what Cap said, just buy ETF law. Yeah, for say later we become 韭菜. All right. So let me share with you my take, and then you decide whether you should follow, right? So between us as a retail investor compared to people who manage big funds, all right, all of them right here, right, definitely $1 billion portfolio. It depends whether uh 10 billion, 100 billion, or more than that, all right, or 500 billion. So it's how many billion? But of course, it's all for them, right? It's definitely 1 billion and above, right? So for them, their size are different. They have different portfolio size. So let's say for us, right, we want to 10 times our portfolio from 1 million to 10 million. For example, right now we all millionaire. We want to 10 times our portfolio. So for us, we just need to invest 1 million and grow to 10 million. So in so-called right now, 10x, right? In numbers wise, how many million that we our portfolio have to grow from 1 million to 10 million, right? From 1 million to 10 million, how many millions that our portfolio have to grow? All right, it's 9 million, right? All right, so we have to grow by 9 million. But let's say right now, this investor at different stage, 10 million to 100 million, also 10x, also 10x, also 10 times, right? 10 million to 100 million. Right now, our portfolio have to grow 90 million. So 9 million versus 90 million. All right. And imagine right now, it's not imagine, right now, for Warren Buffett, they are in $1 billion. So let's say their portfolio is 1 billion. In order to grow 10x, right, is 9 billion. All right. And right now, their so-called investable portfolio is around 300 billion now. So we just put it at 100 billion, right? 100 billion to 10x, right? 1 trillion is 900 billion. So for us, let's say we are a millionaire, right? 9 million versus 900 billion. Same thing, we want to 10x our portfolio. All right. So size does matter. And for us, our portfolio are smaller. So for us, we can have a lot of way and can have a lot of options to grow our 1 million to 10 million compared to all these investors who are handling $1 billion portfolio. All right. Yeah. So this is the first point that I have to make. Size matters. Second, all right. So for if you are looking at all these investors, right, a lot of time they aren't always right all the time. And Warren Buffett have openly admitted that he has made a lot of mistakes. from Tesco to IBM, even at times Coca-Cola did make some losses. All right. So they have make at least in recent years, right? Tesco is one of the more well-known one. Kraft Heinz is the more recent one. So these are the company. Although Warren Buffett, as he have so much wisdom, he still make losses. All right, not all the time, and he's not single out. Right now, look at Katie Wood. All right, so Katie Wood, if you look at her investment in Nvidia, right? So he invested much earlier. Even post split price, right, is around like 10 or 13, like in $10-20. And then he or she sold along the way. You see this number, right? She red color, right? She sold since 2023, right? She sold along the way and then decided to buy back at high price. All right. So for them, do you think it's right or wrong? It's very subjective, but from here, clearly, actually, she don't need to sell. And if they just hold all the way, right, actually their portfolio might perform better. You follow right here, just hack number two. They aren't right all the time. All right, this is number two. All right. So third, yep, their strategy might not be your strategy. All right. So So some of the investor right here in Singapore, we did follow some Temasek kind of announcement, the Temasek investment, all right? So Temasek invested in FTX, all right? So should investor also follow suit, right? And when we follow, are we investing in the equivalent thing? All right. So back then, when people invested in FTX, right, there's a different way. All right. So big investor like Temasek or Mr. Wonderful, they have direct access to FTX. So they invest into FTX as a company, right? We put the fraud thing aside. They invest in FTX as a company. Means, in other words, they invest the exchange, lah, right? So for individual investor, they would like to invest in FTX, right? They couldn't do the direct investment. They have to do like so-called like invest into their token. So back then, their token is called FTT token. All right. So the method is different, the strategy is different, and result might be different as well. Although this one is like all bankrupt lah, it's the same, but result might differ if the method and also the strategy are different, right? So what I want to conclude right here is we might adopting different strategy. In other words, so Warren Buffett might invest in banks earlier days, right? Through so-called his like preference share. He's not directly buying into share. Although he might have a stake eventually, but the strategy is different. All right. So what we have right here is we might be adopting different strategy. Okay. Yeah, Hui Kong say the ending is the same exactly, but the strategy is different. And when they are big, they have negotiating power and they might invest with different reason. All right. So this is Nvidia portfolio. And in Nvidia portfolio, they invested in CoreWeave, Arm Holding, and the Bias Group. Right. So all these company is so-called in Nvidia portfolio. And should or should not, we should not, or should we follow or should we not follow? We have to go back to what is our stance and what is our negotiating power compared to them. All right. So, for example, when they invest in CoreWeave, they have 5% stake. All right. And when they invest in it, right, they might be taking strategic stake. Means once they invest, right, they might nego not just as an investor, they might be nego with a deal couple with it. For example, right now I started to invest in you, right? I put this investment in you, you buy my product, or you share your service with me with preferential rights, preferential price. So the table is different when some of the big companies they invest in this company, right? So they might have some strategic take stakes, or even they can sit into their board. So, for example, some of the companies, right? So, for example, Warren Buffett, right? Berkshire Hathaway, they invest quite a bit in Apple share. So, they might take a directorship or be on the board to make certain decision together with their board of directors. So, for us, So let's say if you are big enough, right? Maybe you invest with big negotiating power, right? So right now I want to buy your shares. Right now I don't want to buy open market. I buy at maybe a negotiated discounted price, for example. So some of these investors may invest through this way. That's why there are different negotiating power. So if you follow, just type in four. So this is the uh, difference between us and them. All right. And of course, timing and horizon. I didn't put things right here because this is very self-explanatory, right? In a sense that just look at Katie Wood, their timing and their time horizon of their portfolio is very different, right? So we have like maybe we have like 20 years horizon or even 10 years horizon. But maybe for Katie Woods, it's like 5 to 8 year horizon. Especially for VCs. VCs, their mandate, right, is within 10 years. So a lot of time depends on timing of investment, right? Maybe just 7 or even 5 years. So it depends on what they invest, depend when they invest, all right? So the timing and horizon is very different from us. Okay. And lastly, portfolio concentration. For them, Warren Buffett, they invest $4 billion. I don't even invest 4 million in Google. They invest in 4 billion. And they are 4 billion, not even 2% of their portfolio. So the concentration and the size is different. Their portfolio concentration is very different. So let's say if you buy into Google, right, maybe it takes up like maybe 10, 20%. But for us like 10, 20%. But for Buffett or for Berkshire Hathaway, it's just 1%. So the portfolio concentration is very different. Lastly, one of the biggest advantage for us as an individual investor is we only need to answer to ourselves. For them, they need to answer to their shareholders. So that's why what I think, or should we not follow their portfolio? What I think is we can just take reference. We don't need to follow what they invest, or even don't need to follow when they invest, or even we have invested earlier than them. For example, some of you guys have invested in Google. We have invested earlier than them. So we don't need to follow their portfolio. So this is my conclusion. If you follow, just type in one. This is the item one of the day. Uncle Burry closed his fund. Yeah. So he don't need to answer the shareholder. He don't need to answer when the stock price crashed because he short Nvidia and he short Palantir. Yep. Yeah. So once he closed his fund, right, suddenly this company went down. All right. Okay. So if you like to even take reference, right, you can just go to this site called Gainify.io. Yep. So this is a new site that I find recently. Right. Why I'm looking at this very straightforward because Fiscal.ai, Fiscal.ai, the sites that I've been using, right? They'll be charging me quite a bit of money. So they have different tier, right? The tier that I'm in, right, should be around 200 plus, but they have increased their pricing to 200 plus. And they say, wow, is there any alternative that I can use? All right. So if you are looking at some alternative, you can just look at Gainify, all right? Gainify.io. It works until this maybe 1 2 hours ago, but I don't know why just now when I want to go into it, right, there's some cloud flare issue. I don't know, it's some setup they didn't do well. They have some cloud flare issue, but yeah, maybe I just let you see lah. Um, Gainify.io. Actually, their site is quite nice one. I don't know what happened to their site, Gainify.io. They have some Cloudflare error. Uh, but never mind. I already write an email to them. Probably some code error lah. So hopefully in the next 1 2 days when it up, I'll share with you guys again. All right. So this is the site that I recently found. And also ask them like if we sign up in the group, right? Do we have like good deal? I'm waiting for their reply. Right. So if you have not signed up this yet, maybe wait another like maybe a week. Let me see whether we can ask for a good deal. All right. So for them, their subscription is at I think 99 per year. Yeah, 99 per year. Yep. So yep. So if you are interested, we can use that. Okay, all right. So this is the first portion of the night. Let's go to the second portion whereby we go into a company analysis. So why we always have this second segment? Because most of the time, the second segment and third segment will share within our close network. But I just like to give you guys, if you are new right here, a flavor of what we are sharing in our private community. So this is a portion whereby we share about company analysis, and then we might touch a bit about our own investment. And yep, that's why it's quite a sensitive. That's why we like to protect you guys. Not to say that this is the companies that invest is definitely good, because when we invest, we know our context, we know our strategy, we know our portfolio, and we know why are we invest or why we are not investing. So this is a very important step that we go moving forward. So moving forward, we also have a call, so-called like onboarding course lah. So to prepare everyone to receive all this information, in a sense, to in the end of the day, how you can make a more objective, so-called like or more close to your strategy kind of like decision lah. Yep. Okay. So if you are interested at this moment, you can always like have a pick on it. So you can go to click.goodwill.com/join-WP, whereby we have all this recording that we talk about different company, from Nvidia to Arm Holding to Dolby to you also talk about Cloudflare. All right, so these are all companies that we talk about, so specifically to stock investment. All right. Okay. Yep. All right. Our website also kena. Oh, okay. Is it Cloudflare down? Wait lah. Cloudflare issue. Ooh, really? Yeah. Cloudflare down. Whoops. All right. That's like X are down amid technical issue at Cloudflare. Cloudflare is down, causing outage at X and OpenAI. Oh, so ChatGPT also really? Yeah. Okay. Oops. All right. Cloudflare is having his own drama. Okay, nice. But no alternative. Yeah. So thank you, Kun, for sharing that our site also down. Means later I'll share a direct link. Okay, must down. Okay, yeah, the share price must down. Hey, the chat GPT right now is like, maybe it's on and off. Hey, chat GPT right now is on, just now it's off. Let me just like refresh. I think they have priority issue, so they are prioritizing the more important website. No down, no show. Okay, yep. But seems like YouTube is doing well. YouTube Live is okay. Thank you very much. And then Canva is working. Thank you very much. If Canva is not working, I have issue sharing my slide also. All right, so let's share this. All right, so the next 20 minutes we will go into what C Limited have been announcing their earnings. All right, so just to declare, I'm a C Limited investor. I've invested some of my stake in it, close to 15% of my portfolio, right? Close to 15% of my portfolio. Right now it's went down a bit, so 10 to 15% of my portfolio is in C Limited. All right, so what are the three things that they shared in their business? So there are three main business: e-commerce, digital finance, and also their Garena. All right. So this is e-commerce gap revenue, like improving, like closing like 30, so-called 35% per year. Digital financials, which is the money, which is their digital finance services. Their loan book is growing as well. This is not their revenue, this is a loan book. And digital earnings booking for their Garena is also growing like at 50%. So you see 30%, 60%, 50% in three of their segment, yeah, year on year. And if you look at their gap revenue is growing, gross profit growing, operating income slightly went down because they have one of the key reason is their margin of their e-commerce went down, right? Several reason, like if you are Shopee or any online purchaser, right? You know your shipping is highly subsidized. Yeah, so they are subsidizing their logistic. All right, so these are the things that people highlighted. Although their get revenue went up, their operating income slightly went down. Right, so yeah, so this is the thing that people who are very so-called positive in their e-commerce, right? So in a sense that yes, their GMV is growing, their Taiwan and Brazil is growing very well, and then they have this Shopee VIP that get subscriptions for members, right? It's also growing very well. But one of the things that later when you look at it, right, is about their margin. All right. So their margin is not working very well. Uh, but if you look at their new market, right, Brazil, right, actually their Brazil has been growing well, and in actual fact, they also test new market. So Brazil in South America, they also test cross border to Chile and Colombia. All right, but the experiment have tell them that actually this cross border is not working well. That's why they switch over from Chile, Colombia. They switch over to Argentina. So they are testing market, but their stronghold market with Brazil is still growing well. Right now, it's still their largest market in South America. Right. So in terms of the what how they deal with it is right now they are still in investment phase. They are opening so-called logistics center as well. So they're opening logistics centers in Brazil to facilitate the logistic. All right. And then of course in what is it called? The Southeast Asia region, they have this like Shopee VIP program. So the Thailand Shopee, the Indonesia Shopee, they have this program whereby if you are the member, right, you can enjoy logistic fees, so-called like free logistic and stuff like that. So they have like discount for people who are in this VIP program. So they want to spur spending for all this VIP lah, huh? And then this number is very very surprising in the sense that their quarter on quarter growth in membership, right, is close to double, 75%. 75% growth in terms of their members. And what's more than that, right? The retention is also improving. All right, retention double for from last quarter. So these are the things whereby they didn't give exact numbers of members. They give just some likes or metrics. So for us, we know that they are the VIP program in terms of like Thailand, Vietnam, or Indonesia are doing very well, and the retention is there. Okay. And then so what they mention is like what they like to do is they always front load the investment so that they can get the return back end. All right. So they give like free shipping, they give all this deal upfront, right? So at the back, they can gain back in a sense that the long-term relationship, they can gain from the money in a sense that all these companies that provide all these services, right? They might build up their loan together with like Shopee, right? So these are the things they like to build to grow the ecosystem. Okay. So in other words, they're just telling you right now we are putting this investment, not cost. So this is what they like to share with the investor. Huh? So they're just loading investment. Please don't see it as cost, right? But as investor, right, we know that this thing, logistic fee, is a cost. All right. It's not like you can get back the same thing like down the road. Logistic cost is always there one. Just whether or not you want to collect from your customer. Yeah. They gain a lot from merchant. Exactly. And then so this is my point of view. So my point of view is I don't think logistic fee is a thing whereby uh, they can just pass down like 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 what they want. All right. So as Southeast Asian, we are too spoiled by logistical fees that so-called logistic costs that bear by Shopee or Lazada because they have been paying it. And then a lot of time, the decisions whether or not of purchasing, right? We might be purchasing hundreds or even $1,000 value, but if the logistic costs us $1, right? We might not buy the stuff. Any of you like that? Means if you need to do some purchase and it costs you $1 to $2 of logistic fee, then you say, never mind, next time. Yeah. So these are the habit of like Southeast Asian like kind of like buyers lah. I just see how many percent they dare to increase the commission for merchant. Yeah, I think this is it's not the commission, but they also mentioned about take rates, right? So in terms of take rates, right, actually they have been improving the take rates. Let me just show you. Yeah, the take rates actually have been improving, but in terms of take rates, right, what the value they have shared with their merchant, for example, advertising. For example, they provide more AI services, for example, right? So for that, to increase the take rates and then get more so-called value from their client. So these are the things that although yep their so-called margin is squeezing, right, actually their take rate went slightly higher. Correct. Yeah. So this is the margin. So the margin have reduced. So if I'm not wrong, they did mention their adjusted EBITDA margin, right, is looking at 2-3%. Yeah. With this trend, right, actually is going down. So that's why the share price have been moving down. This is one of the reason. Their biggest revenue so-called generator, their margin is not improving. Their margin is deteriorating for the last 2 quarters. All right. Compared to their target 2-3%. Right. Okay. So let's look at the slide again. Okay. So you can see where's the tick rate. And this is a tick rate. All right, improving, but the margin is going down. Okay, so money straightforward lah. Money is growing very very. Uh, I will not say furiously. It's growing very very well. All right. So if you look at like the 4.6% compared to 7.9, right? Yeah, the loan book has grown close to double. And with their loan book grow close to double, their non-performing loan means the bad debt is still remaining at 1%. Loan book growing, this one maintaining. So this one is quite good lah, I would say. Yeah. Biggest money not in gaming side. At current, yeah, the biggest revenue generator. Maybe I go revenue, where's the revenue? Wait. Did we have the revenue number? Okay, I don't have revenue. So just look at these two. The revenue, the biggest is still the e-commerce. But the earnings, the bottom line, right? The bottom line right now, the biggest contributor, I don't remember. The bottom line, the biggest revenue contributor right now is Garena. Yeah. So yeah, so I think the last few weeks when I talk about like the selection of investment, right? So I select B2B. And one of the things that I will avoid is gaming, right? Yeah, right now I need to slap myself here already. Why? Because this gaming segment performing better and better. Yeah, the gaming sector performing better and better. You see their quarterly paying so-called user ratio, right, is standing at like 10%. So 1 out of 10 players are so-called like contributing or paying, and then their ARPU per user have been growing as well. All right. But one of the things that I like to share with you guys here is this. I don't know whether you guys follow this like investor called Thomas. All right. He wrote Steady Compounder. So he had a listing. This one also when he highlighted this, I also thought that he's quite sharp. So one thing that he's quite sharp right here is this. Quarterly active user increased 6.7%. But quarterly paying users jumped 31.2%. So this leaves the paying user ratio from 8 to 9%. So what he meant right here is this. The user expansion is not there. All right. The growth of user is not there, right? Quarterly active user, the growth of user is not there. They just improve monetization. In other words, the same user are paying more. All right. So his question here is this. Right. So logically, if you can grow your base, right, you grow your base, you maintain your percentage, right, it's all right because you just need to find another person who pay $10. All right. So right now the problem is the same user are paying more. So they are growing by the same user, right? So I pay $10 right now, I pay 20, for example. Why? Because I enjoy the game. I enjoy paying more to play the Naruto Shippuden. Right. So the problem is to continue to grow, right? Is logically for gamers, right, it's easier to find more gamers pay a smaller amount than the same gamer to grow perpetually. If you follow, just type in a one. So this is his point of view. All right. So what he said is the monetization, the how they grow is through monetization improvement, but not the growth of user expansion. Yeah, so this is what they mentioned. All right. And then he had that this might be quite worrying sign whereby how much you can get from the same user. Yeah. Okay. So I find this like pointer quite sharp. So if you have not like followed them, his website is called Steady Compounder. Uh, some of the time he writes stuff very sharp one, very how do I put it? Uh, very out of the box and sometimes, but it's very crucial pointer. Okay. Yep. So this is the ARPU thing. So all in all, the three segments growing quite well. But the things that we need to take note is the e-commerce, the margin is squeezing. Uh, Obviously, one of the things that they've been subsidizing is the logistical fee. All right. So this is the worrying thing whereby how much you continue to subsidize, and then would this drive down the margin further? The second, which is the banking side, the money side, which is going very well. The loan book grow, but the non-performing loan ratio doesn't grow. So they maintain 1%, which is quite good. The third thing is the Garena. So Garena, yes, is performing very well this quarter, all right, and then their margin is very good. But what things that I highlight here is, yes, their quarterly paying user pay even more, but they didn't add more players. All right. So one of the things that in the previous quarter they mentioned is they like to grow the India so-called the Garena players, but they didn't mention right here in their quarterly earnings. So that's why it's a worrying sign that we need to continue to further follow. So the commerce is the margin, the gaming side is the paying user. If you follow, just type in number two. All right, so this is a segment two that I'd like to conclude right here. Okay, so for me, the company is growing very well. The share price went down. Reason being margin squeeze. All right, this is the thing whereby investor don't like to look at. And yep, but if you come to their valuation, right? So the blue color is C Limited. Red color is Mercado Libre, which is the South American the e-commerce giant. The yellow color is like Amazon. So all these three companies right now, their price to sales is around 3.5 to 3.7 times. So all of them are coming together at the same valuation. The purple color is just to show this is Alibaba lah, Alibaba, right? Their valuation is always like lower than all three. So historically, for Shopee, right, or not the C Limited, right, their band is around 1 to 6 times. So the average is around 3 times. So right now it's at 3.6 times. So if you ask me, according to their price to sales valuation, right, they are so-called fair kind of or even slightly overvalued pricing, right? And it has been reducing from close to 5 times right now is at 3.6 times. So I think, actually, it's quite attractive valuation really. All right. But if you look at this so-called discounted cash flow, we taking by their free cash flow method, and then we take the growth rate at 15%. So why 15%? If you look at their revenue growth, right, it's fluctuating. It's like sometimes like 30%, 50%, sometimes even 100%. So right now, I just put the cap of my so-called like projection, right? Max, I put 15% growth. So if they just grow by 15% every year for the next 5 years, all right, so taking into account their cash and their debt, right, their equity value is around 2 billion, all right, and the share price, so-called fair value, is around 160, right? So this is the fair value valuation that I come out using their free cash flow, all right, their growth rate at 15%, their WACC at 8.5%, and then if their perpetual growth after 5 is 2.5%. So this is 160. All right. So 𝐿𝐻𝐿 say Baba more attractive. So Baba, their pricing, their valuation is always attractive. Always attractive. Yeah. So if you compare to Amazon, you compare to shop so-called like a C Limited, you compare to Mercado Libre, right? Baba valuation is always more attractive. But they you need to be patient enough, and then you need to understand they are at a different market. Yeah, they are in a China market. So that's why comparatively there's a so-called premium at different markets. So US have a higher premium, so their valuation is higher. Compared to China, their premium is lower, so called their valuation is slightly lower. All right. So if you follow, just type in two. All right. So this is the next segment, which is C limited. Right. So I didn't go very in depth on how the company grow, what have they done, what is their business so-called focus and their development. This is more of just their earnings close up. So their earnings doing well. Things are still intact. There's slightly some things that are off. For example, the margins they couldn't grow further. In fact, it's squeezing their so-called playing members are is not growing, but each paying uh, they are paying more per user. So these are some of the signs that we have to so-called closely follow, especially the next year when they announce their quarterly earnings for the fourth quarter of the year. All right, so there's more insights, especially usually the shopping period is the end of the year. Yeah, so it have to be in line with expectation, have to in line with market, so that your valuations will return to their so-called fair value, or sometimes even higher than fair value. Right. Okay. So thanks everyone for watching till now. Right. So right now time is 9 p.m. So thanks for watching till this segment. Um, is the real comedy up ready? All right. So it's not up yet. All right. Wow. Should I switch to Zoom or stay here? What? Community.guru is not up yet leh. Why ah? Okay lah, okay lah. Why not I do this? Um, I block my QR code again. Hi, I think I should have I think I changed the format already, but I don't know why. Maybe this one I didn't. Okay. All right. So why not I do this? So the third segment, usually I will do it on Zoom. But the comedy.guru.com is not showing. Means even if you guys like need to join Zoom, right? The website okay already, meh? Huh. Hey, why my site still show this? Please confirm that you are a human being. How? Hey, I'm here. How? Hey, is it okay? The app okay ah? Hey, why are we seeing the same thing? Hey, I'm in the website leh. This is the thing that I see leh. Shit. Okay liao ah. All right. I can start the session from Zoom lah. So is it okay or not? In app okay. App is okay, but not the website. All right. Wow. Right? Okay. Hmm. Really? The app is okay. Leh. All right. Maybe I give you guys a choice here lah. So should I do here or should I do in Zoom? Here or Zoom? You just step out lah. Here or Zoom? Poll. To me, same. Up to you. Okay lah. So tonight I just share here lah. I just share here. Then too bad lah. Okay. Ah. Okay. Let's do it here. Let's do it here. All right. All right, let's do it here. Can share this tab. All right. So is Clement here tonight? Is Clement here tonight? Because this is the company that Clement like so-called like raise it up lah. So maybe before I start, tonight this last segment I'll be talking about Ferrari. This is the first time I look at this company, and then uh one of the um major attention right here in the investing market, right? Uh, it's all about numbers. For example, when we talk about tech, right, it's about 010101. It's all about like we are in a technology mathematical era. All right. And when I read this company, right, I can just tell you, my first impression is like they're living in a different world. The first impression is they are living in a different world. So we are in an AI race. We talk about technology. We talk about how different software, even like chipsets, AI are growing and doing right. These are not in their vocabulary. The closest vocabulary is really like technology advancement in terms of their engines and stuff. Yeah, not so much about AI, not so much about like the percentage growth, the multiplier, the 30%, 40%, 60%, or even 100%, or 100 billion, 200 billion. This company, this is not their attention. I can say that though they don't care. They are into EV. They are into EV, but not fully into EV. Yeah, later I'll show you a bit more on scam. I don't know. For people who like cars, right? I think they will get sold. Yeah, because like they really sell emotion. They really sell like they really in their this capital market day, right? The thing that they keep repeating is really about emotion. What is the feeling they can transmit towards their client? Yeah. Okay. Yep. So this is the so-called first time that I thought about this company. So it's about how I understand this company before I go into like the numbers, their growth. All right. So this is something like when I first look at company, right? These are the things that I will look into. Uh, very important. In order to appreciate their numbers, right? I must appreciate what they do, how they grow, what is their strategy, what is their vision. And then with their vision, right, what is their target? And then can they possibly achieve their target from what they are doing and what they can achieve down the road? Okay. Yeah. So that's why when we come to our investing, right, there's these three different segments. So first segment is really understand about the business model, their growth strategies, and then how are they going to achieve that. And then with that, right, what is their company mode? And with the mode, can then continue to grow stably or even grow exponentially. This is what the first segment that I will look at. Second segment is really about how they have been like so-called growing in terms of their numbers. All right. So you can have all the beautiful words, all the beautiful in Chinese, all the 大饼画到很漂亮, like all the visions, missions, strategy, their plan can be very, very like out of the box, big, hairy, audacious goal. But do they have a track record doing that? So that's why the numbers come into the second place, whereby the second segment whereby for the past 5 years, past 10 years, have they been consistently delivering? All right. And lastly, very importantly, whether or not we are an investor, we have to look at valuation. And sometimes if the valuation is so crazily cheap, right? We might take a stick, for example. Yeah. So these are the three different segments. Porsche almost lost their soul. If EV lost the sound, I think we'll become current Porsche. Okay. Yeah. So the fire journey, you point out a very, very key pointer. So that's why later I'll share with you like what is their stance or what they think about the EVs, and then what is their strategy moving forward. they got quad motor that nobody have. Wow, quad motor, this thing I don't know. Later share me. Huh? So if you like to understand, right, please watch this video, Ferrari Capital Market Day for 2025. It's a 3 hour videos. I also watched like roughly like 1 to 1.5 hours, right? By like 2 times speed. Just to get the key gist of how they present, why they present their way, and then what is the conviction that they have. And yep. So the first thing they show is what is Ferrari, right? Ferrari is a symbol of relentless will to progress. Wow, they are selling the feeling. They are not selling car. This is the first slide they shared. Ferrari is a symbol of relentless will to progress. So they tell you Ferrari is not static. All right. And then they always come with these three different things: racing, sport car, and lifestyle. So there's these three different groups that follow Ferrari. So first group is about racing. Anyone watch F1? If you watch F1, just type in the one. Watch F1. So right now the driver is like Charles Leclerc and Lewis Hamilton. All right, right? So racing. So all the race fan, whether or not you are Mercedes fans or you are don't know, Red Bull fans, all right. So which fans you are? So there's a big group of Ferrari fans, all right. And then why there's a big group of Ferrari fans? Because there's a heritage right there. Since F1 started 1950, they are the only car racing team, right? From start until right now, every year is there, right? So there's a so-called heritage. There's a loyal fan group. So this is the first group, which is racing. The second group is the sports car. People who like the machine, like this, the sound of the beast that can drive super fast. They call it supercar. All right. Then the third portion that they are building right now is lifestyle. They may or may not be the racing fan. They may or may not be the sports car owner, but there's this lifestyle that they like to adopt, the heritage, the vintage, the luxurious lifestyle that they like to adopt with Ferrari brand. All right. And they are this is their ambition. So they like to win in the F1 race. They have this exclusive client community. You, if you are in this, it's not easy to join in a Ferrari community, right? And even if you join in this Ferrari community already, in order for you to buy a car, all right, you have to wait at least 20 to 24 months. If you like to buy a Ferrari, a new one, you got to wait 20 to 24 months. And in order for you to buy the first Ferrari, right, you got to buy the second hand first, just to prove that you are committed as a Ferrari community or Ferrari brand community. All right. So all in all, in order to you to reach that stage, right, it's a long process. Yeah. If you follow, just type in a one. It's not easy to be in a community, and it's not easy to own a Ferrari. Yeah. Okay. Yeah. So once you are in, right, haha, is where you start flashing. All right. Plus exam, right? Okay. So anyone know this person? Yeah, worse than MS. Yeah. So this is J Lin. All right. A Singapore singer. All right. And at last, after 20 to 24 months, he got the latest like limited edition car, Daytona SP3. Yeah, and this is when he start to show off a bit. Yeah. Hmm. So he bought this car. He's in a Ferrari club. Yeah, and a limited edition some more. Okay. Yeah. So this is the exclusivity for people to join in the sport car community. All right. So what they're selling? They're selling heritage. They're selling the technology and staying racing. All right. So just now, Hui Gong also say, they are into EVs, and then if the EVs is like no sound one, they have problem. So that's why this is their car model lineup to 2030. So 2022, they disclose that they like to be 20% internal combustion, means like fuel car lah. They have the engine sound, the fuel car. 40% hybrid, and then 40% electric car. This is what they mentioned in 2022. But in 2025, they switch it around. They like to stay 40% back in internal combustion and 20% electric. Yeah. So what they mentioned is they listen to their community, they listen to the people in their club, and then they say that people are still preferred this internal combustion car. Yeah. 2 days before, no, 2 years before, 2022, 2024. So 2025. So 2022, they mentioned is 20%, 40% electric car. Right. So the community still wants a internal combustion car. All right. And this is the ecosystem they are building. So there's a lot of different names. So there's Ferraristi. Ferraristi is the Ferrari car owner. T4C and sponsor, right? T4C is race car fans. All right. And these are the just Ferrari lover, just like the fashion, the apparel that they like to adopt. All right. They listen to their rich client, obviously. And then later I will share you one thing that I find um their strategy is very interesting. All right. So from the first ever Ferrari being produced, right, up until right now, is around 330,000 Ferraris in the world. I don't know what is there. I think it's 1920s lah. Till now, there's only 330,000 Ferrari. And what's more is more than 90% are still existing. In other words, the heritage car is still existing. They are still so-called like servicing their clients, and then the car might still be able to so-called be on the road 90%. Yeah, so they raise this thing called Ferrari forever. Right. Once you are in Ferrari, this car is Ferrari forever. Yeah. So the car value is always there. That's where people, even they need to buy second-hand car, to buy the new car, they're still willing to pay for the second-hand car. They call it pre-loved car. Yeah. And then just to compare, they have 330,000 till date. And Toyota, BRD, and Tesla, right? They are shipping millions of cars every single year. If you see there's some like jarring difference of number, just type in number one. Where got choice? Yep. So there's this philosophy in their car production. Always produce one less car compared to demand. Always produce one less car compared to demand. In other words, demand always more than supply. When demand always more than supply, there's always desirability more than what the market, what they can produce, means they can control pricing. So this is their strategy. Always produce one less car than demand. Yeah, if you follow, just type in one. This is how they control pricing. Always produce less than demand. Yeah. This is what I find very, very interesting. Okay. Yeah. So maybe I just jump. Okay. Let me just share it right here. All right. Okay. So I just jump one slide. So there's like their engineering expertise. All right. So right now there's 330,000 car. There's 90,000 active clients. Means people who are constantly like going back to them and buying new cars. Right. So 32,000 of them are new to the brand. Means new buyers from 2022. Right. So they have added more new buyers coming to the pool. And with these new buyers coming to the pool, right, people who add cars to their garage, right, averagely add 20%. So in other, 1 in 5 people of this so-called active client, right, they add one more car in their garage. So rich people mine is a bit different. I got Ferrari car already. I want to buy another one to add into my collection. Yeah. So this is what they are building. Their clients are unique. And they want to show their clients' average age, right, is around 50s. Yeah. So I think partly there's a big group of people are going to the boomers age, which is the 60 years old. So right now they are going to get more people to join in. So for example, JJ Lin is definitely millennial. Huh? JJ Lin is right here. And then I would say, the Blackpink Lisa probably is like millennial Gen Z. Yeah. So right now they are adding in people into this group and maintaining their average age at 50 years old. Yeah. So they want a more matured group of clientele that can withhold Ferrari brand. Yeah. And then, yeah. So they say different Ferrari for different car enthusiasts. And then, yeah. So when it comes to electric car, right? So they already have electric car that will be coming out in 2026. They already sell it and sold it, but it's not on the road yet. It will only be on the road in 2026. Yeah. So they have this different electric car, sport car. And what they mentioned about this SUV, right? The Ferrari version of SUV, right? The so-called the rumor said the waiting time is 3 years. So the Porsche version of SUV, right, is like all over the place. But Ferrari one is still not on the road yet, and the waiting time is very long. Yeah. Okay. Yeah. And these are all the different the car range, huh? I will not go into it. So from the track cars, from the road cars, yeah. And what they want to build is really about emotion. They like to build the Ferrari emotions, the Ferrari owners that are proud to be in the community, right? So yeah, so every car, if you have bought it, you are a new buyer, right, or new car, right? They even custom made for you, custom made like what's the so-called interior stuff, color, whatever, right? So to make sure that every single car is different. Yeah. And right now they have these three different places. So Maranello is where Ferrari started from, and there's LA, there's Tokyo that coming in on 2027, right? And right now they have 4 launch per year, huh? So these are the thing. Not important, not important. Yeah, there's more technology stuff, right? And then so for brand, right? So they want to shift from like so-called sportish to more luxurious brand, and yeah, more sportish to more luxurious, right? And these are the things that I find from the research lah. All right, so I think making the brand or the item more scarce, elevating the value, and also with more value per unit, right? We don't need to push volume, right? So this is their strategy, right? So that's why even if you want to buy, right, you will wait up to 20 to 24 months. The SUV may be up to 3 years, all right? Uh, Sometimes the limited one sold out before public announcement means they really need to tell the internet network. And then when it's scoop up, yeah, that's it, all right? And then this is the thing, the length must be between, so the waiting time, right, must be between 20 to 24 months, right? Anything too long, especially new clients will get annoyed. At the first place, right? If you want me to wait 20 months, right, for a new car, right? I say, I go flight kite. 20 months, I need to ferry my so-called, I need to drive around. 20 months, how can it be? And then, production, right? They only produce 13,000 to 14,000 annually compared to the rest, like in the millions. If you follow, just type in one. They only like produce, right, just 1% of the rest. Yeah. And then they don't intend to increase the production, right? So they even mention, right? So they stay the same production level, but they increase the customization value. Means they charge maybe average like 500,000 more for customization. Yeah. What kind of customization? I'm not so sure. Ah, if anybody drive Ferrari right here, maybe you can share with me. What are the customization that can cost up to 500,000? It's another car leh. Yeah, so it's like wow. When I look at this, like wow, this is another level already. So they have like 180 dealership around the world, right? 180 dealership, and there's no direct to consumer. Okay, so that's why the dealers, right, need to really examine the buyers, right? So I really find the buyer journey first you need to make friends with the dealers, and then when you make friends, right, in order to be a new buyer, right, you need to purchase the old Ferrari. Once established, right, you need to pay a deposit to wait for a specific model. And when customization come in, right, you have this tailor-made program that the final price become like 500,000. Yeah. So in Singapore, right, this one is not included your COE. This is just car price. And then once everything is approved, and you need to wait 20 to 24 months. Yeah. So like Hermes Club need to go through this route as well. Rolex Club need to go through this route as well. Yeah. Right. Okay. And then resale. First year you cannot resale some more. And then when you resale, right, you need to let Ferrari know. And then Ferrari have the rights to so-called make the first order. And then when they resale, right, you need to go through them as well. Yeah. If you don't go through them, you get blacklisted. Yeah. So this is how they protect their brands. So I think car compared to Hermes, right, they have better control. Yeah. And then for Enzo Ferrari, the founder, right, always deliver one less car than the market demand. And this is the emotion-driven branding. So it's all about emotion. So they keep repeating this word called emotion. Yeah. And Clement did ask, recently the share price went down. So raise share price. All right. So the share price, right, have went down like close to 20%, like 25%. Yeah. You cannot modify Ferrari car by yourself. Exactly. Yeah. So, wow, is this 25% things that we can look at? So this is why I haven't brought this across. And then why there's a share price like drop, right? Okay. So why the share price drop from here to here? 25%. Is they set their sales target for 2030 at 9 billion. In other words, 5% annual growth rate. Everyone just type in 5. So for them, from now to 2030, they only look at 5% annual growth rate. 5%. All right. And these are the time whereby I go crunch my number. 5%. Actually, they definitely can make more, but why they don't make more? So the reason being in this. In 2020 to 2024, why they ramp up so much is because there's COVID period that they ramp up their production. They need to sell a bit more to catch up the growth a bit. Right? So this is 2020 to 2024. But in till 2030, right, their target is just 5% every year. So they will not increase much. So I just project this. So they project 5% based on revenue, right? Based on revenue. I just assume like the car price is the same, right? If the car price is the same, they need to project the growth as per accordingly, right? So the numbers of cars. But from what they say, right, they are not intend to increase the production level. So the 5% might have a big portion is from just customization and pushing up the revenue per car. All right. So right now, this is the thing they are looking at. So 5%. And because of this 5%, people thought, hey, it's so different from the initial these 5 years, which is like 10%. It's half the growth rate. So that's why the share price went down. Yeah, that's why the share price went down. That's why the 5% growth rate is a thing whereby the market don't like it lah. And then for an investor, yeah, some would say 5% is a bit conservative. Yeah, but 5% they need to increase close to like a production of 4,000 per year from their workshop lah. Yeah, so if they don't increase their bookshop, right, the production, right, then yeah, this is a bit challenging to increase the production per year. So they need to either increase the car number or increase the sales number per car. Yeah. And in this one is just by increasing the car revenue, right? But in terms of the raising and lifestyle means the lifestyle end, right? They just intend to increase very minimally. So in actual fact, right, actually this one, right, if they want to boost up, right, they just sell more lah. They just sell more like your luxurious clothing, your all your Ferrari branded kind of clothing. Yeah. But they didn't intend to increase much from here as well. Yeah. So all in all, I think they are just going back to this thing called brand protection and to their strategy, sell one less than the market. Yeah. All right. Okay. So this is what I find out thus far. I think worse than Toyota. All right. Emotional blackmail to make their member exclusive. Yep. So this is why when they come to branding, right, the European are still the best in branding. The French, what your Hermes lah, LVMH lah, the emotion sell. Yeah. So yeah, there's a saying, right? The Chinese, there's a conference say, don't just look at how American do business, look at how the European do business, how they build the brand. Yeah. So I don't need to sell more. I just need to sell higher price, and then people are willing to buy at higher price. Okay. So actually, I want to show this form to show the Ferrari valuation, but too bad it's not there yet. And then I'll show the numbers. All right. Okay. So this I'll just conclude Ferrari so-called initial like kind of like findings and initial kind of like reading of this company right here. So what I conclude here is this. This is the brand that sell scarcity, emotion, and sell branding. And then second is with that itself, right, they can increase price. All right. And then they have an exclusive club that are waiting for their new cars. Yeah. Waiting for their new cars. And then they make people wait 20 to 24 months. And the electric car, they make people wait for so long, they only come out in 2026. Yeah. So they are far behind, but people are willing to wait and pay deposit and pay money. Yeah. And they make people feel so great, right? Because all the cars are customized towards your requirement. Yeah. So they can keep on increasing price. Yeah. So the one liner, sell one car less than demand. I think it's very, very unique strategy. So after I share this, right, they talk nothing about AI. Nothing about AI. They just talk about why people follow them and why people are willing to pay more. Because they have the best engine, best car, best feeling, and best emotion when you own the car. Yeah. So and the to conclude this, why the share price went down, right, is because they set their sales target at 5% per year, which is I don't know. Some of you guys like 10%. You also say like not good enough. You want 30% sales growth, but this one is just at 5%. Yeah, yeah. So this is the thing whereby they are proud of their brand. They know what they are selling, and they are not in urge to like be tech company like 30, 40, 50%. They are building this for a long term. And why they show 330,000 cars and 90% is still on the road means this group of people are still continue, they continue to service them. So they can maintain the longevity of the company. Yeah. So I think they sell really different stuff. Huh? Yeah. And then they are pushing the age back to 50 years old, means they are so-called getting more matured, more successful so-called business or so-called owner entrepreneur to be in their network. Yeah. Okay. So the numbers and also the financial numbers, let's look at it next week. Okay. All right. So I've covered all in this YouTube live session. Yep. Thanks to Cloudflare. Cloudflare are making some of the sites down. Yeah. Yeah. They got valuable people in their network. All right. Okay, let's stop the live right here. So once again, thanks for joining us tonight. And then I believe some of you guys have stayed in for quite a while. And then these sessions are supposed to be end like around 9-ish. And then I extend you right now because the private community sessions I put it right here because Cloudflare down or comedy.google.com down, and then yeah, people couldn't access Zoom from there. Right. So once again, thanks for you guys for joining in live today. And then this is the fourth last sessions for the month. And then I will carry on until the second week of December. So I'll doing this every single week until second week of December. And then the last 2 weeks will be just pure recording. And then you close off the last quarter of the year. And then next quarter, I'm thinking about a new format already. And then yep, so if you like to continue it, I'll share with you how to continue it, and then how we can continue to grow together as a community. So once again, thanks for joining me on WealthPulse Live. And then for those who are in private community, thanks again for joining me. And then if you like this session, share with me your thoughts in whatever places that you can put in. It can be on a WhatsApp group, it can be on a YouTube video, right? And then more importantly, all these informations in the end of the day, how you translate it to your portfolio, to your action, or to your personal growth. Yeah, I hope all this can translate into that. All right. So yeah, for people who are in tech, you know that just now Ferrari is like a whole new business model that I this is also the first time I look at this kind of like luxurious company. Yeah, we did talk about LVMH, but I think Ferrari is next level. Yeah, a different way of tactic, different way of selling, different way of like emotional hook. Yeah. So yeah, thanks Hui-Kwang. See you on next Wednesday. And then just rehash right here. So I'll be in KL next week, and then I'll be in PJ together with Hui-Kwang at Ultra PJ, 7:30 to 9:30. We haven't decided which place to sit in yet. We will come to a decision like in Tuesday itself, and then up to you guys on Wednesday. So if you like to so-called come together on Wednesday itself, please text me, please put in the WhatsApp chat, and then we will create a group, and then we will meet on next Wednesday in KL. All right. Once again, thanks everyone for joining in. Right now it's 9:40. Love to see you guys next week as well. So same timing, next Tuesday, 8 p.m. We will start YouTube live. All right. So without further ado, thanks everyone. Good night and see you next week.